Hello, guys. Glad to have you guys here. Welcome to the Market Report. Now, today is Wednesday, March 13th, 2019. We got a lot happening in the news today about Brexit. Oh, boy, they're having an awful time there. It's only 2 weeks away, a little bit over 2 weeks away until a hard Brexit. And they're trying to do everything they can not to have a hard Brexit, but it keeps pushing toward that. We got that in the news. Let's open up the charts right here and let's take a look at what's going on. First, let's start and we'll take a look at gold prices. We've seen a gold break back above $1,300 again. $1,307 this morning, up $5.90 today. And let's take a look at silver price. Right here. Did I get the right one? Yeah, silver price. We're up 4 cents on the day so far, $15.46. Gold and silver are both looking pretty strong right now, and that's good. It could be worries over the Brexit. Remember what happened when they first voted for the Brexit, how it shot the price of gold and silver up, when they didn't expect the vote to be for a Brexit. Way back when, And I remember, silver price shot up like a bullet. Went straight up, Now let's take a look at cryptocurrencies for a minute. Cryptocurrencies got a little bit of a problem today. They're selling off the altcoins. This doesn't really bode that well for cryptocurrencies today. $133.3 billion market cap with a Bitcoin dominance of 51.4%. And we're seeing a sell-off in the altcoins. I've seen this before. You watch them selling off the altcoins. I'm going to tell you what. It means they're moving into Bitcoin, more than likely. And Bitcoin price hasn't went up either. That's a bad sign in my books for the cryptocurrencies today. We could see a fall. But look at it, guys, as a buying opportunity if we do see a fall in the price of cryptocurrencies. Let's take a look at the big one, Bitcoin, right now. We're looking at 39.37 at Bitfinex right here, and now let's switch to Bitstamp. And Bitstamp, we're looking at $3,840, and we can see this slow decline in the price, And then they're selling off the altcoins too. Doesn't look good today. It doesn't look good, even though we haven't had a fall yet. Any big falls in price, it doesn't look good to me today. Very foreboding. Over the next couple days, we're going to have to keep our eye on cryptocurrencies. Now let's move into the pre-market data, the Dow Mini. Let me pull the charts in here a little bit. We're going to take a look at the Dow Mini. And we're looking at up 47 points on the day on the Dow Mini. That's the pre-market. Now, I don't really see the Dow going up much today, because of what's happening in Britain over the Brexit, I don't see the Dow making any large gains today at all. In fact, I could see it probably falling off some before the day's over. That's my outlook on the Dow. Now let's take a look at the oil today. We're seeing a rise in price of oil. She's up 53 cents on the day. Now we've seen a steady, but very slow, but steady increase in the price of oil ever since the December of last year. It's been a very slow increase, but it's moved up substantially because we were looking at a price of $43.93 in December, and now we're at $57.39. That's a substantial increase in the price of oil. And, the Saudis are leading this, and OPEC is leading this increase in the price of oil. But, the United States now is producing oil hand over fist. They are making more oil than you could imagine coming out of the ground in the United States. They're really pumping the oil. They've become the major big player in the oil industry, in the major big supplier of oil for the world right now. And moving forward, there's an awful lot more oil in the United States, but the more oil we're talking about, when we go into more oil, it's going to be more expensive oil because it's a little bit deeper, a little bit harder to get to, but they got lots of oil in the United States. Now let's take a look at the bond market. What we're looking at is we're looking at a raising bond market, but it's way too low to begin with. They've been buying up bonds like crazy. U.S. 10 years, 2.619%. U.S. 5 years at 2.427. The U.S. 2 years at 4.63. So we're looking at a 2 year that's higher than the 5 year. But this has been going on for a while now. This is an inversion between the 2 and 5 year. We've been seeing this for a little while now. The thing about these bonds is there's been tremendous buying into the bonds, and they've been trying to buy short term. They've been buying into the 2 year really heavy. They don't want to invest their money for a long period of time, but they want a safe haven asset. You know, they foresee trouble coming in the economy. They see this recession. We're moving toward this recession. And that's what this is all about, this heavy bond buying, because they see the bonds as a safe haven asset better than gold. It's easier for them to move into, too. If they're going to move into gold, these guys, these players, they'd have to buy SLV, or they'd have to buy a paper version of gold. These are big players that are moving in, and we're talking about large amounts of money, you know, big amounts of money. And they're only used to being able to push a button to buy. They don't physically allocate gold, real physical gold. These guys, these players, you know. And so it's easy for them to push a button and move in one direction or the other. 2 clicks of a mouse is what these guys are used to. You know, they're not the players that go out there. They're not the small guys that go out there and buy up coin and bar. They don't add to the coin and bar demand, you know. Let's move on here and let's look at the U.S. dollar index today. 96.85, and we're looking at a falling U.S. dollar index. And this is part of the reason why, as long as this continues today and we see the dollar falling off back from the 97s, it's backed away from the 97s where it was last week, and it's at 96.85. It looks like it's continuing to fall today. If we see this, we can bet that the gold price and silver price today are going to continue to heat up as the day progresses. So watch the gold and silver price. As long as we see the dollar index continue to fall, we're probably going to see the gold and silver price heating up later this afternoon. Now, let's move on here. Zero Hedge got an article on here. I'm not going to go into depth on it, but basically it says the global economy is a time bomb waiting to explode. You know? It says in the aftermath of the greatest financial calamity since the Great Depression, they're talking about 2008, the then Chief of Staff for the Obama administration, Rand Emanuel, made the call for aggressive action to prevent a recurrence of the meltdown in 2008. It says, although the U.S. government's system of checks and balances typically produces incremental reform, Emanuel suggested that during the times of financial upheaval, the traditional levers of power are often scrambled, thereby creating unique conditions whereby legislators could be pushed in the direction of more radical reform. This is why he suggested that we should never let a crisis go to waste. Ironically, that might be the only pearl of wisdom we ever got from the soon-to-be ex-mayor of Chicago, one of those figures who otherwise embodied the worst of Wall Street eccentrics of the Democratic Party. But give Rams props for this one useful insight. Did we let the crisis of 2008... Well, I'm going to tell you, honestly, the crisis of 2008 was never repaired. They didn't do what they should have done. They should have let it play out. It would have flushed all of the waste out of the system. It would have flushed the toilet. But now we still got that, and what they've done is they've added more poo to it. We got a stinking mess out there now. The crisis of 2008 was never handled properly. They papered over it by expanding the monetary supply. And now we got a bigger crisis looming. And this is the whole trouble, you know. Now let's see what else we got on here. I had a few stories. I wanted to talk about the U.S. dollar index for just a minute, you know, and just what exactly it is. The Chinese renminbi, the yuan, or the renminbi, doesn't make up any part of the U.S. dollar index. Now, don't you think that's something weird? The fact that the second largest economy on the earth, isn't even part of the U.S. dollar index. They are, in fact, part of the IMF's basket of currencies called the SDR, but they only make up a small fraction of the SDR, you know. But they're not even on the U.S. dollar index. Guess who's the biggest player on the U.S. dollar index? The euro. Look at what a big part of the U.S. dollar index euro makes up. It's amazing. 57.6% of the U.S. dollar index comes from the euro. But now, you see this brown part here? The British pound makes up 11.9%. That's a lot. And what amazes me even more is the fact that the Chinese renminbi, or yuan, doesn't make up any part of the U.S. dollar index. But see this red sliver here of the pie? That's the Canadian dollar. That's an amazingly large chunk, considering Canada is such a small country, of the U.S. dollar index. So, Canada, their real estate is rolling over. This could have a profound effect upon the U.S. dollar, not only through the banking structure, because the Canadian banks are all linked into the American banks through derivatives contracts and stuff. It's amazing, right? And the Canadian banks over the last number of years have made record profits. And the reason why is they've made record loans out to people whose house prices have went way up. If these loans become non-performing, well, picture a guy, say a guy owns a house in the Toronto region, and back like a number of years ago, his house was worth like $30,000. All of a sudden, the price exploded up to $2 million. The bank come along and said, hey, you know what? We'll give you a line of credit on your home, based on your home. The line of credit that they gave him was amazingly large. They could go out and buy RVs. They could put in swimming pools. They could take trips to Florida. And this is what they did. The money's all gone. And they owe like $500,000 to the bank, you know. And we multiply this over thousands of people. Now the real estate prices are starting to fall. Soon these people are going to lose their jobs, not be able to pay their mortgage. They're going to walk. This is called non-performing loans. Then the bank, all those record profits suddenly turn into absolute defeat for the banks. And so the banks get in trouble in Canada, makes up 9.1% of the U.S. dollar index. Amazing, this big red sliver. But Europe is getting ready to, everything's getting ready to turn over in Europe. It makes 57.6% of the U.S. dollar index. That's huge. If anything happens to the euro, that's huge. And so this could destroy the dollar in ways we've never thought possible, because everything is coming down to Brexit here. The European Union's trying their best not to make, they don't want to see a glorious success for England when they leave the European Union, because they want to keep these other countries in. They don't want the whole thing to fragment. Everything's up in the air right now. We got huge problems on the earth. Listen, thank you guys for listening to this market report. Stay tuned, and I'll probably do a show either this afternoon or tomorrow afternoon. I'm going to do some research and find out what's going on out there. There's a lot going on, but I got to do more research and find out what's going on today. You know, because the news keeps changing. You know, it's not stagnant. See you guys later. Bye-bye.